Assalamualaikum warahmatullahi wabarakatuh. We are from Group 2. We'll present about issue related takaful and insurance. Firstly, let me introduce our group members. First, SHALIZA binti Umar 272758. SYUHADA binti Ismail 272898. Zila Ilyka binti Muhammad SUKRI 272992 and Siti Asma SHAHIDAH binti AZLIN 273032.
Takaful is the protection that based on Sharia, also known as Islamic insurance, wherein the members contribute money into a pool system to guarantee each other. Takaful branded insurance is based on Sharia or Islamic religious law. There are two types of takaful, which are general takaful and family takaful. General takaful, also known as property takaful. The general takaful contract is a short-term policy where the participants pay contribution and the operator undertake to manage the risks, which are mostly related to materialistic loss or damage that participants need to bear. Thus, the components of general takaful are property takaful, motor takaful, marine takaful, and miscellaneous general takaful. While family takaful is a contract that can cover all the dangers that related to human life, family takaful is a contract of tabarruk. Thus, the element of family takaful are term life takaful, whole life takaful, endowment takaful, universal takaful, marriage plan, and education plan. Insurance is a contract between individual or entity and the insurance company in order to protect client from losses. Insurance, also known as an agreement by which a company or the state undertake to provide a guarantee of compensation for specified losses, damage, illness, or death in return for payment of a specified premium. However, insurance cannot be taken by Muslims because the existence of riba, gara, and maisir in the contract, which are prohibited in Islam.
Assalamualaikum. My name is SYUHADA. My matric number 272898. I will tell about historical development of Takaful and conventional insurance. Firstly, Takaful. Takaful started in the early 1918 in response to the Muslim public's desire for a Sharia-compliant alternative to traditional insurance, as well as to supplement the operations of the Islamic Bank, which had been formed in 1983. The Takaful Act was passed in 1984 as a result of the task force recommendations, and the first Takaful operated in Malaysia in November 1984. The Takaful contracts are based on the concept of tabarruk, which is donations, and agency or profit sharing, whereby all participants who join the Takaful plan agreed to mutual assistance and guaranteed them should disaster or accident occur. Secondly is insurance. The first insurance in Malaysia started in the 18th century based on the British system. After independence in 1957, nationalistic policies gave much encouragement to the domestic company to improve their market share. However, this boom boost when many companies without proper underwriting practices went out of business, leaving their policy owners holding worthless policies. The government stepped in to remedy the situations by introducing the Insurance Act 1996, replaced to the Insurance Act 19 BIFS2013 to make some vital change to the legislative framework for improving the supervisions and regulations of the industry in terms of operations and financial discipline, transparency of policies and practice, and protections of the policy owners. That's all from me. I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is SHALIZA binti OMAR and my magic number is 272758. Today, I will explain about the difference between the insurance and the takaful. So the first difference is in terms of benefit. Benefit is the payment that the insurance company need to pay to the person that entitled to receive it or the beneficiary. Based on the Takaful, it use mutual assistance where the fund will be contributed from all the participants and the risk will be bear together by all the participants. So for the benefit, the Takaful operator will pay the benefit using the fund contributed by all the participants. While for the insurance, the risk is transferred from the insured to the insurer. So for benefit, the insurer is the person that responsible to pay the benefit that have been promised in the agreement using the insurance company fund. The second difference is in terms of financial investment. Like everyone know, in Islamic law, all contract involve financing or investment must be Sharia compliant. So all the Takaful fund must be invested in Sharia compliant securities only. But when it comes to insurance, the company fund can be invested in any legal instrument accessible in Malaysia as long as comply with the government national insurance regulation and the government law. The third difference is in terms of regulation and operation mechanism. The operation mechanism for Takaful must follow to Sharia law that have in Islamic religion. The Sharia law is divided into 5 categories. The first is obligatory, recommended, permitted, discouraged, and forbidden. Besides Sharia law, the Takaful operating also must follow the national insurance regulation and the government law. But for the insurance, it only need to follow the government national insurance regulation and the government law. Next difference is in terms of profit. Profit is the return that the company get from the investment that they have do. For Takaful, the profit gain will be distributed to the both party, that is the policyholder and the shareholder. But the percentage of the profit that the shareholder get is more higher than the policyholder because they manage the company on behalf of the policyholder and they also managing the policyholder's investment fund on behalf of the policyholder. However, this is not same with insurance, where the shareholder will receive 100% of the profit generated from the investment. If the insurance company get lost, they will recover it on their own and participant will not involve. Next is paid premium. So, in the case of Takaful, if the member paid for a premium plan such as Life Takaful, the contribution will be split into 2 accounts. First is Tabaruk, participant special account, which handle all the payment and the benefit. And the second account is Mudarabah participant account, which is for saving and investment account. This is comparable to conventional fund insurance policies, which a portion of the participant payment is invested and the remainder is used to cover the participant protection and the other costs. The last difference is in terms of Sharia. In Takaful practice, it need to follow the Sharia rule and free from 3 elements that are riba, gharar, and maisir. Riba is interest where it earn money on money, while gharar is uncertainty and maisir is gambling. These 3 elements is prohibited use in Islamic contract. While for insurance, The contract may have all the elements prohibited in Islamic contract. This is because insurance is not bound with Sharia principle.
Assalamualaikum warahmatullahi wabarakatuh. I'm Zila Ilyka binti Muhammad SUKRI 272992 will present about issue in Takaful and insurance. In Takaful, there are two issues. Firstly, issue in Sharia and legal. According to Nordin and Diko, they debate whether Takaful activities are still used in the concept of tabarruk and ta'awun. Diko said, Takaful model raised diverse challenges that call the core Takaful nations in question. Some of concerns include in the Mudarabah model, which incorporate profit earning and asset sharing is practices in all models save the pure wakalah and pure Mudarabah models. Nordin said some Sharia scholars propose a more precise Takaful contract that contains hibah bishartin iwad al-nahdu, waqaf and sadaqah to reflect the two primary principles of Takaful. Majority of Takaful operators in Malaysia choose to treat the nominee as the executor. The Sharia Advisory Council of BNM issues a filing stating that Takaful benefit can be handed out as hibah and that operator must furnish a standardized form that is clear contract stating the nominee's position as either a beneficiary or an executor. The regulatory framework is rather modest in comparison to the market expansion due to industry's fast growth. The second issue is awareness on compliance. The Takaful standards include risk assessment and management guidelines, corporate guidelines, reporting guidelines, internal control, fraud detection and prevention guidelines. Malaysia is one of the Muslim nations that have enacted Sharia governance framework and use the BIFS2013 to regulate Islamic financial organisation. Takaful operators also should have their own Sharia advisory council at the corporate level in types of circumstance. Regardless matter where Takaful operators operate, compliance is required. Next, I will continue with the issue in insurance. First issue is fraud danger is increasing. Due to development of technology, everything at your fingertips causes information to be easily leaked. It will increasing a fraudulent in claim efforts. For example, fraud in travel claims. The fraud risk is not limited to consumer claims. Employees should be provided clear standards about remote connectivity methods and best practices, including file sharing and data dissemination. That's why Takaful operator needs to do a collaboration with a forensic team, with a cyber and forensic teams, with the IT teams to avoid information being leaked easily. Second issue is Takaful operators need to do some innovation with Takaful product. It is because nowadays there are many competitors in insurance sector. Insurance operators need to make an innovation to be a good operators of insurance. The innovation must be aligned with the company's strategy imperative, whether it's to improve the customer experience or become more operationally effective. It will make customers attractive to the product they offer by the insurance operators. That's all from me. We'll continue the presentation with the next presenter.
The purpose of this presentation is to determine the differences between Takaful and insurance, which is Takaful replace the insurance service for Muslim. This is because insurance are prohibited in Islam because of existence of riba, gara and maisir in the contract.